As back to our top business story, the war between Israel and Hamas has ignited new fears of wider consequences in the Middle East, with concerns around the cost and the supply of oil at the forefront of traders' minds. To bring us more analysis, we're joined by Ms. Amena Bakr. She's Chief OPEC Correspondent and Deputy Bureau Chief at Energy Intelligence, live from Dubai. Ms. Bakr, any hiccup, any geopolitical hiccup in the Middle East, you will see a reaction in terms of oil prices, let alone a full-scale war like we are seeing right now. But you are of the position that unless the fundamentals are shaken, the fundamentals of supply and export, we are unlikely to see a lasting, meaningful impact on the cost of oil.
Yeah, that's right. I mean, any geopolitical tension, especially in the Middle East here, where, most of the production of the world comes from, if you see any tension in this region, you see an immediate increase in the price of oil. And we saw this morning Brent jumping to around 87, trading above $87 a barrel. How sustainable that is remains to be seen, because overnight there have been no fundamental changes to supply or demand. Those are two factors that we need to keep a close eye on. But in terms of sentiment, geopolitical tension, the threat that any of these conflicts has on supply, of course, means that we're going to see a volatile environment and possibly a higher oil price.
Right. Volatility aside, we might see a very real change to the amount of export if, for example, sanctions are re-tightened on Iran. I mean, neither Israel nor the Palestinian territories is a major oil supplier, but Iran is. And if Iran is found officially culpable for this attack on Israel, the U.S. is likely to tighten sanctions on Iran, and that could affect oil prices.
That's one possibility, correct. If the U.S. does decide to tighten its sanctions on Iranian exports, I mean, in recent months, we've seen Iranian exports increase, which shows you that the current sanctions aren't really effective. However, if it's concluded that there is a need to tighten sanctions on Iranian oil, that would mean less supply to the market and change the balances a little bit. But for now, the Iranian government has said it has not been involved in the Hamas attack. So it's quite unclear what action the U.S. will decide, despite many Israeli officials pointing the finger to Iran, saying that this was an instruction by Iran to Hamas to hold these attacks.
All right, and it's not just supply. Export of oil could also trigger a lasting change in oil price. We're looking at, earlier on the bulletin, we're talking about possible attack or conflict in the Strait of Hormuz, through which 40% of the world's exports travel through. It sits between Oman and Iran. If that should happen, assuming that does happen, do you see any big changes to oil supplies and prices?
Yeah, the Strait of Hormuz is a major artery in terms of exports globally, and around every day the Strait of Hormuz moves 17 to 18 million barrels a day. It's major. Of course, any disruption to that will have a huge effect on prices and supply to the market. So so far we're not hearing anything along that. There has been talks of kind of de-escalating the tension that's going on. So in terms of the Strait of Hormuz being disrupted for now, it's a concern on the minds of traders, but nothing indicates that we're going to see a disruption in flows for now.
Final question now, Ms. Bakr. Should sanctions go ahead on Iran and oil prices hit above $100, OPEC policy in terms of its cuts, voluntary and group cuts right now, do you see that policy staying steady, or are we likely to see OPEC release more supply? Final question.
That's a great question. I think it would kind of depend on the situations. If OPEC does assess this, the supply situation and finds that there's a gap, they might decide to ease supplies. But what I am confident about is that OPEC Plus is not going to be reacting just based on price. If prices hit over 19, which we had previously, or even $100, that's not enough for the group to roll back the precautionary measures that they have in place, which is basically the 2 million barrel per day cut until the end of 2024. You have the voluntary cuts by Saudi Arabia and Russia. So this isn't the only factor that they're looking at. They're looking at other factors, which are demand and supply and the overall sentiment of the market, in addition to what central banks are doing with interest rates. So there are many factors to this, and it's not just about $100 oil.
Oh, thanks so much for that. Amena Bakr, Chief OPEC Correspondent and Deputy Bureau Chief at Energy Intelligence in Dubai. Thanks for joining us.